24th November 2022, the Nigerian Bureau of Statistics held a sensitization workshop on the implementation of two surveys geared towards improving the economy. The Statistician General of the Federation, Seni Wadeniran, introduced the 2022-2023 Nigerian Living Standard Survey and a newly enhanced Nigerian Labor Force Survey, which is to be done across all the states and all the zones in the country. This report from the Nigerian Bureau of Statistics has been used for situational intervention and programs in Nigeria and outside the country up until the last release of the MPI last week.
The Nigerian Living Standard Survey and the Nigerian Labour Force Survey are two surveys that will provide us information that government can use to provide policies, programs, and intervention projects to support Nigerians in their daily, day-to-day activities when we talk about labor force, as well as the welfare of the citizen when we talk about the Living Standard Survey.
The World Bank Country Director Nigeria, Shubham Shaduri, was also present at the event. He stated that the World Bank remains in partnership with Nigeria and is always available and ready to support the federal government to make progress and achieve tasks and make lives of citizens better.
We want to come in behind government priorities towards policies and programs that help Nigeria make progress without data to inform the policies that government adopts, or to even recognize where are the big bottlenecks, where are the big challenges, where does government need to direct its attention or direct its financing and support. Without data, that's not going to happen.
The National Population Commission is delighted to partner in this lab initiative here because we'll be partnering in providing the listing exercise, the building numbering and household exercise, providing the maps, the digital maps that have been used for the current national frame that is existing for the eradication for the country for the forthcoming census.
The Living Standard Survey serves as a useful input into the compilation of economic indicators like the GDP and the Consumer Price Index.
This data will also ensure that the government and every individual have reliable and accurate information on the gaps and issues concerning the labor market to boost employment generation in Nigeria.
Welcome back from the break. Let's quickly bring you the activities, the Financial Inclusion Summit I told you that was held just a few days ago, that Moneyline with Nancy. I was there. We had different discussions, at least to give you an insight into financial inclusion in Nigeria. Don't also forget that we've seen that the new Naira notes have been launched. We have a new 200, 500 and 1,000 Naira. How far or how many more years will it take the Nigerian population to be financially included? So I would leave you in safe hands. Just take a listen to how the proceedings went.
At the onset of my administration, we developed a blueprint for economic growth and development called the Economic Recovery and Growth Plan, ERGP. The plan was focused on economic recovery in the short term and sustained growth and development in the long term. This plan enabled this administration through its flagship agricultural initiative, the Anchor Growers Program, of course under the central bank, to provide access to credit. Farmers were required to open a bank account to access this facility, and this marked the first time many of them had accounts and has consequently led to the growth of financial inclusion amongst this underserved segment. This administration understands the impact of financial inclusion on economic growth and development, and as such has provided the enabling policy environment for financial inclusion initiatives to yield the expected results. For instance, in the year 2019, I launched the micro pension policy, within which was aimed at deepening pension penetration among the MSMEs and the informal economy generally. We also initiated policies for microinsurance and collective investment. These initiatives are geared towards providing access to a wide range of financial products and services to the underserved, in line with our national financial inclusion objective. This administration understands that it will require innovative models to fast-track the attainment of its growth plans. The place of fundamental infrastructure like citizens' identity database and broadband internet is central to the attainment of digital economy strategy. And to that effect, over 90 million Nigerians have now been captured in the national identity database. Also, a broadband penetration strategy with specific targets have also been developed and is being gradually implemented.
Today's event is jointly hosted by the Central Bank of Nigeria and our partner stakeholders within the National Financial Inclusion Governance Committees. In line with extant statutes, the Financial Inclusion Steering Committee is the apex body responsible for implementing the Nigerian Financial Inclusion Strategy and ensuring the alignment of financial inclusion policy objectives to the inclusive development objective of the federal government of Nigeria. The global meltdown in 2008 made financial services regulators focus on improving financial system stability and mitigating risks that could lead to a future recurrence. Nigeria implemented a tighter prudential regime to respond to the meltdown. While these efforts improved financial system stability, it inadvertently undermined access to finance as entry barriers to the financial system became a disincentive for many economically active Nigerians. The response to the global event in 2008 was not entirely responsible for the low access to finance for the underserved in Nigeria. Infrastructural deficits like low broadband penetration, lack of a functional national identity system, and high cost of delivering financial services through bank branches to the underserved contributed to Nigeria's financial exclusion situation. As of 2008, 52.2% of Nigerian adults were financially excluded. This implied that 1 out of every 2 adults had no access to financial services in Nigeria. Even though Nigeria had a sizable number of banked population, our financial inclusion rate was one of the lowest in the sub-region. And more worrisome was the fact that many adults were financially excluded. Youths aged between 18 and 35 and our micro, small and medium enterprises that employed over 60% of Nigerians were disproportionately excluded from access to financial products and services. Consequently, stakeholders undertook the onerous task of driving access to finance for the benefit of the hitherto excluded segments through the National Financial Inclusion Strategy. As at the end of 2020, the financial exclusion rate had reduced to 35.9%. While this remains high, when considered as absolute numbers, it is a huge improvement when compared to the position as at 2008. This change did not happen by accident, but resulted from the decisive and concerted approach by the national financial inclusion stakeholders to address key pain points and bottlenecks that were deterring financial inclusion in Nigeria. Your Excellency, distinguished ladies and gentlemen, financial inclusion is key to economic development and inclusive growth in any country. Various up-to-date researches and painstaking analysis show a positive correlation between financial inclusion rate of a country and its GDP growth. As such, our focus on financial inclusion was imperative to ensure sustainable development and growth in the Nigerian economy.
A lot has changed in a decade, I'm sure you would agree. Innovation, digital technology, internet, social media have transformed every aspect of our lives. The fact that this conference is held in a hybrid format, I think, is a case in point. Some of the biggest impacts we've seen in technology have occurred in the global payments and financial system. We've seen mobile and electronic banking changing the way we deliver and access financial services and opening new vistas for financial inclusion worldwide. Nigeria joined 10 founding members of the Alliance for Financial Inclusion, signing the Maya Accord and committing to reducing financial exclusion. We launched our target in 2012, financial inclusion of Nigerians by 2020. We've made significant progress in this respect to 64.1% from 53.7% when we started. This is despite remarkable population growth annually over that same period. But perhaps more importantly, we're very proud of the rapid digital innovation and the concerted policy initiatives of the CBN and other sector regulators that is transforming the banking and payment system in Nigeria. These efforts are enabling technology-driven solutions to the key challenges of lack of KYC, digital identity, financial access points, and robust payment infrastructure that we find in many excluded economies. Nigeria indeed is at a tipping point for financial inclusion. I dare say at no time has there been such a prevalence of an enabling regulatory environment, the proliferation of digital technology, innovation, and the collaborative will to ensure that we achieve financial inclusion for all.
The World Bank Global FinTech Survey shows only a 5% growth of financial inclusion between 2017 and 2021. And managing economic shocks remain difficult. Only 14% of adults today can come up with emergency funds without much difficulty. Now, this new strategy offers a genuine chance to achieve a common vision that every Nigerian, no matter their background, geography, or gender, can improve their lives through access to quality financial services. Now is the time for action and innovative solutions to seize the many new opportunities before us. First, we have a chance to significantly increase access to digital identification, which is critical for service delivery from finance to health and education. The growth in enrollment for national identification numbers, now above 89 million, is an encouraging development. Moving forward, we can explore how the NIN and banking verification numbers can better integrate and complement each other's objectives. Quick passage of the Data Protection Act will further support digital service delivery. Second, we can ensure that services and businesses are able to sustainably reach the last mile. This includes the fintech sector, whose impact on financial inclusion has untapped potential, which can be enhanced through a range of policy measures. Making fully operational the regulatory sandbox efforts and simplifying licensing frameworks will be really key here. Making full use of tiered KYC rules for low-income and rural customers, expanding shared agent networks, and further investing in mobile and data network coverage is key to reach rural clients, including in northern states. Third, this is an opportune moment to close the financial gender divide in Nigeria, which at 20% remains significantly higher than the sub-Saharan average. Ensuring gender parity in access to digital IDs, mobile phones, and digital connectivity is an ideal place to start.
As we've heard, we have done incredibly well in the last 12 years, but we are still short of our target. And the question for us is, what do we need to do differently? The question that we must first answer is, what is the last mile? Because the traditional use of the phrase last mile might be different from what it means in the financial inclusion space. So we need to ask ourselves, what is the last mile? Where is the last mile? And who is the last mile? And I'm going to start, not with my regulator, so that I can allow the operator the freedom to express themselves. Tony, you have had the opportunity of being on the street, of talking to people across this country in different communities. You've seen the various nuances. You've seen the idea of one country with multiple economies. You've seen the differences across gender. My first question is, the way you view the topic is, where is the last mile? Thank you.
Thank you so much, Mr. Suleiman. Thank you, everyone. Would use my favorite saying in public sector. I stand on all existing protocol. And so I would share based on my experience. I think I'm a scientist by training and I'm a researcher by heart. So I think 3 years ago, the question I was asking myself through a research team I joined was, first, why is it that certain products, I don't want to name brands, alcohol brands, cigarette brands, the minute they come into Nigeria, you could find them in communities we consider excluded, in remote northern villages and remote communities. And I asked and said, why is something as critical as financial services that is connected to poverty alleviation, that is connected to being outside of the shadow economy, that is connected to identity validation, not something that we're seeing there. So the truth is, the last mile is, it's not a destination, it's kind of a journey. I like to see the market in like 3 pyramids, or should I say 3 steps, 3 phases. At the top of that is many of us in this room. At the second level, because if I'm going to pay anyone in this room, I probably don't need cash. I don't think I have 1,000 naira in my bag, because all of us inside this room are what we will consider, I think, digitally included. But now we have another segment. I live in Lagos. If I have to go to a Miru market, as much as I don't have to carry cash, I would. If my housekeeper needs to go, even if I transfer money to her, the minute she gets there, she goes to use the POS machine to withdraw cash. Now the problem down is that we that are included have to connect with another segment, and we have to move away from the digital form into cash form to serve them, which cost of plenty money, cost of too many things, and then just crime. All of this is happening. Then you then have the bottom of the pyramid, which those people are serving. So in a nutshell, we do have the last mile, sometimes in the urban area. We do have the last mile in places like peri-urban, and they have a large expanse of them in the bottom of the pyramid in I call it rural communities.
Coming to my regulator, Mr. Juma, you are in a unique position to see all the models that has come through this country. You've seen the bank model, you've seen the fintech model, you've seen all of the effort, and in fact you have to approve them for them to be out there, at least if they have some element of payment included in it. What are the models that you've seen? What has been your experience? And which of these models do you think we should be focusing on if we want to scale for the last mile?
Thank you very much. Let me start discussing this by starting from, where the entire conversation was about 10 years ago. We had a situation in this country where people do not have verifiable credentials. If you go to a bank and you want to open a bank account, the first thing they ask you is to bring an international passport or you bring a valid driver's license. We had a situation in this country where we had that you put the money in your bank account and over time it's eroded by the interest that your bank charges them. And so we had numerous of problems that were actually pushing people away from the financial sector. And what the central bank as a regulator has done was to identify this problem and begin to solve it through regulatory intervention. So we came up with the mobile money regulations, basically to push digital financial services to the nooks and crannies of this country. We also came with the Paycheck KYC. The DG talked about it. The reason was because we actually wanted to clear the requirements for having access to the account, so you didn't need to have this kind of stringent identification documents to open the bank account. And so we also came with the cashless policy with the hope that with digitalization and enabling of financial touch points, it will bring down the cost of banking products and therefore translates to reduced fees and charges that we give to the customers. Now we move beyond that. That's what the conversation. We actually move beyond that. The conversation is about the fitness of the products and services. The products and services that are actually giving this particular. Yeah, you can bring a lot of products and services. If it doesn't fit my need, I won't use it. That's why you have a lot of dormant accounts. That's why you have a lot of accounts that are open but are not used, because the products and services for which they were open for do not fit them. So what I think the conversation should be now is about what kind of creative products, what kind of initiative can we bring into financial system, into banking system, such that those products and services will fit those people that are excluded. And I think that is where the regulator comes in, by providing a regulatory environment that will enable and stimulate innovation. And so we'll be talking about various technology innovation like USSD, innovation. You talk about contactless. You talk about the offline, just like the keynote speaker talked about it. Offline is very important because you don't have pervasive digital signal in all the nooks and crannies of this country. There are places you go where you'll be struggling to have access to digital signal, and so your phone or your POS will not work. And so what we're trying to do now is to look at how can you provide services to those who are not digitally connected. So offline is very key. You also talked about digital identification. People need to be digitally identified. So digital KYC is very important. How do you identify people? How do you ensure account ownership? That the person who says is enough account is stood out. And with that level of identification, banks and other financial service providers are able to provide credit because they know you, they trust you, they have everything that they can use to trace you. And so what we have done in all of these is to provide environment where the startups, the innovators, the fintechs, and all payment service providers can come together and give innovative products. So as regulators, we come out with regulations, we come out with contactless regulation, we have come out with open banking, we've come out with innovation sandbox. Innovation sandbox basically is an environment where people that do not have CBN license, people that are not being granted license to operate, can actually come and showcase their idea. To get a license for CBN, you need to apply for application fee, and eventually when you are given your license, you pay for licensing fee, including having stringent conditions of making sure that you are a registered entity. If you are not registered, not a registered company, will probably not listen to you. Now we want to provide an environment where you don't have to be a company, you don't have to have an MD, a CEO, and all of that. You don't need to even have 100,000 naira to apply for license. All you just need to do is come in our box. We grant you the opportunity to test your innovative ideas, which we sure will help in promoting financial inclusion. Come and test it, connect with all the entities in the ecosystem, the banks and the payment service providers, and test this product. And once it becomes viable, economically viable and feasible, then you can then take it and promote it, thereby making it commercially viable to the entities. These are the steps I'm taking out. I think this is the action that I think all the banks, all the digital service providers, and other payment service providers should come together as an ecosystem, including other regulatory agencies like the NCC and NDIC coming together, working together to make sure we advance financial inclusion.
I want to bring in Dario. One of the most important with financial inclusion was that we started to treat it as if it is synonymous with payment inclusion. And among the payment rules were put out and people were on it was that financial inclusion. The problem being that does not create the prosperity that it is intended. The question that I was going to put to Dario is, from the Securities and Exchange Commission's perspective, have they started to look at financial inclusion as something that they're going to push aggressively, and what would be their roadmap to bringing investment into the financial inclusion space?
We will ever say we're on the last mile. It will keep moving. The population keeps moving. Like, for example, the reason why I'm not able to join you physically is because we are launching our revised capital market master plan, which is a document we created almost about 6-7 years ago. But a lot of things have changed and will keep changing, and that's why nothing should be static. So what is the SEC doing? First is, and I like to say that in relation to where we are at as a nation, and then what we're going to do to cover this last mile. Last mile, in definition of it, will now depend on where we are at the moment. Remember 5-6 years ago, digitization was more popular. Digitalization. Now we're dealing with so many things around technology, fintech, cryptos, and all of that. So things will keep moving. Now, so I'll just answer your question in several ways. Last mile. Currently, now digitalization of processes, quickly making sure that processes around the regulatory space in the capital markets move fast enough. You know, that is the issue. When computers first came, we were so excited we had a computer. Now, if a page, if you're trying to load a page and it comes up in more than a minute, we move to another page. So it's not just about the technology being available, it's been fully operational to address what we want. Secondly, now that is the current. So leveraging technology to address or to keep the interest of the current team or new investors is one of the ways we are looking at covering the last mile. And I'll just give you some statistics that helps. For example, in Nigeria now, one of the statistics we have gives an indication, or gave an indication just about a year ago, that the average age of investors in the capital markets in Nigeria was about 50. When you agree with that's an aging population in a country where you have over 40% between 39 downwards, maybe between 15 to 39 thereabout. So what had to happen? You need to adopt technology. Technology, by one single transaction that we adopted technology in just digitalizing the process of helping people come on board. That's one of the transactions of one of the telcos. Not alone did we address female inclusion, we addressed getting more youth into the investment brackets. That's because they open new accounts, a lot of them were first-time buyers in the capital market. But more importantly, it just helped, the statistics we still have indicate that the average age of that singular action helped crash average age of investors from about 50 years plus to about 30 years plus. Imagine if all the initial public offerings are now digitalized. And all documents digitized so that everybody doesn't have to seek and get prospectus and hard copy, annual accounts, everything is at the flip of a phone. It will definitely help. So that's currently. Secondly, what about the people coming behind? So that's where financial literacy and investor education comes up. So at the SEC, we recognize that is in fact one of the integral parts of our capital market master plan, which, like I said earlier, we've revised, we're relaunching, and we are able next time. We'll be doing that in a couple of minutes. I just took time out to quickly join us because we at the SEC, we're not really an integral part of this advocacy and this drive. It's something we do, we almost build it. But within this SEC, we have almost about 3 desks. We have an investor education desk, we have an innovation desk, we have a financial inclusion desk specifically just to keep driving this. Then talking about the future, so I've spoken about the current. Currently now we're doing digitizing and digitalizing processes just to make it faster and easier for people to report. And that speaks to identity management, uniform identification, which we get to speak to other agencies about just to make things easier so that there's a central, or should I say a more common pool where identity of investors or to-be investors or people that want to access financial service can be easily drawn off. We've seen the success of the BVN. We want to replicate that. We've seen in the identity management part of it in name. We've seen how that comes. So those are things we're leveraging on. You have a core responsibility of developing the market as well. Thank you very much.
Do we see a set of collaboration between the central bank, the NCC, the SEC, and a couple of other top regulators to create the pathway that will take what I would call the rails into the final frontier? And what are these ideas that we should be looking forward to?
Yeah, thank you very much. Truly, infrastructure challenge is one of the major challenges that we have. Without digital presence or telecommunication presence in an area, there is no way you can deliver digital financial services, because as it is today, most of our financial services are done on handheld devices, our phone, our tablet, and all that. And everybody needs data. So the question is, how do you achieve it? Central bank doesn't regulate the telecommunication industry. And even the money that is kept in the bank or with other financial service providers needs to be insured. Central bank doesn't take care of the insurance policies and insurance protection. And so we have a lot of regulators that we need to discuss with and work with. We have a very strong relationship with NCC. We actually have a joint technical committee involving the 2 institutions, and the objective is to promote digital financial services. And so what we do is that in our regulation, as you know, central bank today, we don't just wake up and then push out regulation. What we normally do in the first place is to call the stakeholders to come and review. We expose to the industry for them to bring the feedback and all that. With NCC, for example, in our mobile money regulations, they were deeply involved, because for any device to connect to their network and provide